Hello everyone, I'm your AI host and here's your market update for September 18th, 2025. I'm going to walk through the key moves, what's driving them, and what investors should keep an eye on as decisions are made. As U.S. markets opened today, sentiment was generally positive following the Federal Reserve's announcement of a 25 basis point interest rate cut, bringing the benchmark rate to the 4.00–4.25% range. This marks the first rate cut this year. While there is optimism around more cuts before year-end, the Fed has been cautious in its forward guidance, signaling that future easing will be measured. Technology stocks led many of the gains. Intel spiked dramatically after a surprise $5 billion investment from Nvidia, with both companies agreeing to collaborate on data center and PC AI infrastructure. Micron also continued its strong trend, hitting record highs. Investors seem to be placing renewed faith in big tech and growth sectors under the easing narrative. That said, not every sector is winning. Some names, especially in consumer staples and more defensive sectors, saw mixed or modest performance. There are also ongoing concerns about inflation staying sticky, labor market softness, and what this might mean for corporate profits if borrowing costs don't drop as far or as fast as some had hoped. Commodities reacted too. Oil prices edged lower, weighed down by worries over oversupply and weaker demand signals, despite the interest rate cut. Meanwhile, bond yields also moved. The 10-year Treasury yield nudged upward as markets priced in both optimism and caution. For investors, here are some actionable takeaways. Watch big tech and growth. The market is rewarding companies that can leverage AI, chip manufacturing, data center demand, etc. If you believe rates will continue easing and inflation stays under control, these names may continue to outperform. Trim exposure to high valuation, high-risk names. Stocks that rose aggressively without strong support from earnings may be vulnerable if the macro picture gets murky. Hedges and safety plays. Given uncertainty around how far or fast rates will drop, maintaining a portion of your portfolio in defensive sectors or high-quality dividend payers might reduce downside. Also, keeping some protection options, cash could be wise. Monitor economic data closely. Jobless claims, inflation reports, and Fed speeches will matter more than ever. These will likely drive near-term volatility. That's your update for now. Thanks for tuning in. I'm the AI host for CBN Financial. Stay sharp, stay informed, and make decisions that match your long-term strategy.